Welcome traders, hope everyone's well. Okay, this is a follow-up on the order flow series that we've been discussing and doing episodes on the channel. What we're going to cover today is we're going to cover correlations. We're now going to start adding in treasuries into this because we're having a lot of the people in Discord and a lot of subscribers are asking more about treasuries as it's some of the markets I trade. Okay, so what we're going to look at here is we're going to look at the correlations between the 5, 10 and 30 year bonds, and we're also going to look at the correlations between ES, NQ, the Russell and the Dow. Okay, so we're going to run over the session from the 31st of May. I think it's a good session to run over. I had it in a live stream, and we'll run through the ridiculous buying where there was 260 ticks ES moved in approximately 30 minutes, and we can see the correlation on all of the orders that came in. So first things first, before we jump into treasuries, I'm going to bring up correlation data so that you guys can actually see and not just take my word for this. Okay, so we've got two up here. This I want to first address the correlation between the treasuries and ES, where I continuously hear traders and other individuals say that there is an inverse correlation between treasuries and the S&P. In my opinion, it's not really reliable, to be honest with you. So you can see here that there's such a small correlation, almost positive from the between the ES and bonds. Okay, and in my opinion, it's best just to use treasuries in their own right. Okay, because we can see here that this is the correlation between the 10-year and the 5-year. The correlation here between the 30-year bond and the 5-year notes, and this is the correlation between the 10-year and the 30-year. Okay, so extremely correlated. Now you put this against the S&P, not really any correlation there. If anything, it's meant to be an inverse correlation, and this is in the last 30 days. Okay, so remove that. Just if you're trading treasuries, have up the 5, 10 and 30s. Okay, for your correlations. And then when it comes to your actual equities or indices that you're trading, if you're going to jump into that, we'll jump over here. So this is the correlation between ES and NQ. This is the correlation between ES and the Russell, and this is the correlation again here with the Russell and NQ. Okay, so this is over the last 30 days. Again, a nice positive correlation. Okay, so they're important. So if you're trading indices, okay, stick to indices and use them in the DOM so that this is a positive correlation, and it can give you insight into what's happening on a balance day, what is not. It maybe help you stay out of some breakouts that are going to fail, and that's why they're super important. In order to get really simple and easy trades, you really need to have all equities moving at the same time. Now, if you want to take this a step further, you can drill down into the individual stocks and have the big six, such as Google, Apple, Amazon, Meta, Nvidia. I think of Microsoft. I'm sure I've covered the big six, but you can go into something like TickStrike or Price Squawk if you're using Jigsaw, and use that to see the actual size it's coming in, because ultimately they affect the futures price in NQ and in the ES. Okay, but I just wanted to set the record straight about the correlation between treasuries and ES, because it's thrown around a lot, and I personally don't think it's that relevant, to be honest with you. Okay, so we'll jump now back into treasuries. Okay, and we'll have a look at this. So we're going to play this, and we're just going to discuss simply what you're looking at. Okay, so on the right here we have the 5-year. excuse the two, this is a recording, so we've got two mice flying around. This is the 5 year on the right with the time and sales. This is the 10-year note in the middle with the time and sales just on the left. This is the 30-year bond with the time and sales. So you can see how liquid these prices are. Okay, we've got just short of just over 5k on the bid and 6k on the offer on the 10-year, and then on the 5 year we have 1600 on the bid and 1600 on the offer. So relatively even here. And then the 30-year we have 500 on the bid and 1500 on the offer. Okay, the 10-year being the one that is the most liquid out of all of the treasuries. Okay, so one of the things that this is a completely different market to ES, and one of the things you need to take into consideration is spread trading. So this is a good example of to what's happening. We can see that there's aggressive amount of buying that's just come in into the 10-year. There's also buying that's come into the 5. Okay, how the market is not really moved, but then there was some selling coming into the 30-year bond. Now, very typically, a this is a glimpse here of each part of the curve. So you've got the short, middle, and long end of the curve, and typically people are, buying the short and middle end, and then they'll be selling the long end, for example, right? That's just typically what they do for spread trading. I don't really spread trade, so I just typically trade the outrights and look to see how the correlations are affecting. And what I mean by that is, if, for example, if the 5 year aggressively hits into the bid here and takes out this level, and then likely you're going to see some more size come into the 10-year at the same time, and if whatever one breaks first, you tend to have a move up or move down in the opposing part of the curve. Okay, so that's again back to the data we just looked at. There's a positive correlation there. Okay. So I just wanted to start gradually introduce you guys more to treasuries, as I think it's good for order flow for everyone to start, because they're just much slower, and it's a really good place for you to start learning because they move extremely slow. Okay, so we'll press play here for a little second, and we'll just discuss what is happening. So these two lines that I have drawn, the red obviously is the POC. You can see there's 112,841 contracts taken at this price, okay, at 25.5, and I've drawn these two lines because the prices have been here for literally an hour. It's been within this 3 tick range for an hour, and effectively what's going to happen is whatever which way the market breaks up or down from here, okay, you're essentially going to see a little bit of a sweep. You can see that the profile is a little bit untraded. There's a bit of a gap until we get up to this more high volume. So if we do break to the downside, we're going to see a little bit of a sweep because there's so much volume traded here. And by a sweep in treasuries, you're talking like a tick or 2 ticks, to be honest. Like it's not like ES where it's 15 ticks and it comes back into value. It doesn't really do that. So this is also supports this where the 30-year bond wants to go back up to the point of control in this sort of area. Again, if it sweeps the low, we're going to see come back down to this this step in the profile here. Okay, so this is where when you're trading treasuries, you're looking to see constantly with the combined pulling and stacking how much has been pulled at each price. Is the 10-year been pulled? You can see all the size that's just come in there. Okay, but the offer is absorbing. So it depends which market's going to move first. So we've just seen more selling come in. So right now it's just completely imbalanced. You would need to wait and see if it's going to pop here, and then if it does pop above this price, you would ultimately look to see the bid's been reloaded continuously, and then ultimately see what the 5 year is doing and how's the 30-year doing, the 30-year bond. Okay, so the reason why I'm saying that this is good for it's good for new people to order flow to start implementing and executing these markets is you have got so much more time, and I'm not saying that lightly here. Like they move so slow. So for example, if you get in a short here, okay, so you say, right, I think this is going to break the lows and go down the sweep down here, or whatever the thesis is for your trade. So you get filled here, the market then actually takes this price. It's not going to go and take it and blast up 5 ticks. So you'll likely see the market will tick up. Okay, there's going to be some orders then getting filled, and then ultimately if the bid starts getting refreshed and the offer getting pulled, you can just get out. You can get out for 1 to 2 ticks, for example, because ultimately whatever which way this cracks up or down, you don't really want to be on the opposing side of that. Okay, so that's the first segment we're going to cover on treasuries. We're going to gradually introduce this more and cover some actual live trade examples. I'm going to record my trades in treasuries, and then we're going to run through them for when I'm executing on the 30-year bond or the 10-year note. Okay, so now let's get to the indices action. Okay, so I think this was at about the 1 hour 50 mark. So let me just jump there. Now bear in mind this is a recording, so I can't really clear this. We adjust just for context as to where we were on the day. We had quite an aggressive open, and then we filled back into value. We then swept down the low, and then we were just going back into this range where you can see the yellow line is. We had essentially just taken the stops up here, and then the market's now going aggressively bid. Okay, so we're going to play this out here. And there was a number of people when we were watching this in the live stream. We were discussing how positive the delta was. There's not been a seller in sight. Okay, now this happens over the course of about 30 minutes. Okay, now watch how the correlations work together. As we now know from looking at that data that there's a positive correlation between the ES and NQ, NQ and the Russell and the Dow. Okay, there is something between a 60 to 95% correlation between those markets, and you can see that they're all ticking down right now at the same time. Okay, NQ tends to be the one that will lead, and then it will bring down ES at the same time. Okay, now ES obviously is not as volatile as NQ, so it'll tend to go back up and tick up 4 or 5 ticks when NQ does do the same. Okay, so we're going to skip forward. I think it happened in about 10 minutes, but you can see that NQ is aggressively lifting the offer right now, and everything else is ticking up at the same time. So we'll see how NQ behaves. But you can see how much NQ is taking up the market here, and then you're seeing the bids. Can this hold? And then the size there just coming into NQ that again takes that up, and that was there from that one size that held on ES. Again, this 37 lot is then looking to try and hold up the price. Again, bounces off it, holds up the price. There is some absorption happening on NQ right now. Okay, the other markets are then again trying to tick up. This is the Russell and this is the Dow. We can see the high of day is approaching for the Dow. See the amount of absorption here that's just been done. The sellers aggressively tried to hit there about 300 contracts into the bid, and it's just been absorbed. So what you're looking for with MBO data is to see how the market reacts when it gets up to this level. Okay, do I take trades simply off of this MBO data? No. You want to see how the market reacts when it gets up here, but it gives you an indication as to, right, there's actual size sitting on here. Okay, because all the other orders was 149, 174. Not one of those orders that are in that price are greater than 50 contracts. And we can see that NQ is just trying to hit into the bid there, but not essentially moving. And we're gradually ticking up, taking everything. Look at the delta as well. The delta, there is not any sellers in sight. It's just continual one street buying at the moment. Okay. Now what we discussed on the stream here was the fade at the highs. Okay, we had this drawn up. We wanted to see ideally the market aggressively lift into the level. Okay, and you want to see it happen quickly. None of this grind of death. You want to see it aggressively hit into the level, and then you want to see large orders stacking and buyers essentially struggling to then take the next price. And when that's the case, you can get in quite aggressively on your position, and you can try and drive price down for say a 15-20 ticks. But you can't be really greedy on them, because if it's the first hit of that level, you're likely to see some price come back from it. Okay, but you need to be careful. You can't be taking home runs on these trades. You want to get your easy 15-20 ticks on ES and then you're out. So we're going to skip here, but there's going to be a lot of size coming into NQ in the next couple of minutes. You see that NQ is ticked down here, but ES is not really moving. So we'll watch and see how that actually happens when it does come in. And it's really, really important for you to note the correlations that happen here, right? Ultimately, you do not want to be selling this until it gets to an inflection point in the market. And the next inflection point here is going to be the high of day, okay, on ES. If you're trading NQ, then you need to have the chart up and see where the steps are in the profile. So we want to see how the market reacts when it gets to this 50 and a quarter, whereas 150 lots waiting. There we go. NQ again is then ripping the highs. And we see it trying. We see some selling coming in, and everything ticked down again. Notice the correlations. As soon as NQ some size come in there, the whole market then ticked down. It would almost be absurd to not have these markets up and to only trade one individually, in my opinion, because one can lead the other, right? Okay, we're going to fast forward here until this size comes in. Okay, should be coming in now. Once they crack these highs here, it's essentially going to be lights out for any form of selling, because now they're aggressively trying as first sign of any sort of negative delta. But what we'll do is, once we get to the highs, we're then going to fast forward, and we're going to look at the prolific buying that essentially occurred. It's some of the most aggressive buying I've seen. It's the most I've seen this year, put it that way. And essentially, the large firms just decided that it was their time. It was their time to start loading. You can see they're now flashing the bid here, 100 contracts, and the sellers are not taking. They're just trying to absorb absolutely everything that any sellers are throwing at them while hitting into the offer. And notice everything is there just ticking up. The amount of size that just come into all of the markets. The Dow is just approaching the highs. The Russell is even ticking up. And notice that the buyers are lifting their prices, trying to get filled. Now we're going to fast forward just a little bit. When it does get up here, you can see just again the aggressive amount of buying that's happening. It's happening across the board, and any time that NQ drops off like 10 ticks, then you're seeing ES pull back 4 or 5. Very, very common. Notice that in the buying here, buyers are continuously lifting their prices higher. You don't see that often. They were down here. Now they're aggressively lifting 4 ticks higher. They're trying to get filled to continuously drive price. And notice all of the markets are again picking up. The Dow is at the highs. We're now just about to approach the high of day. Fast forward a little bit. Here we go. Okay, we're coming up. This is the level that I was discussing when the market came here, where this is my sort of classic trade that I like to see. When the market comes aggressively into this level, Okay, ideally it's not at 10 to 4 US time on a Friday, to be honest with you. That's ideal if that doesn't happen. But this is a fade I was looking to take. Again, the same action. The buyers are just taking every next price and then lifting the prices up. 200 contracts here. Notice all the selling that's still there, and buyers are just aggressively lifting into the offer, taking the next price. And there is no letdown in the other markets as well. The Dow is cracking the highs, NQ is trying to go down but is still pumping higher. This is just an absolute runaway train, you know. And you need, if you, there is no way you would be shorting this until you get to the high of day. You know, it would be, commercial suicide in my opinion to be doing that. You know, it's the last thing you want to be doing. So we'll watch how the market reacts. This is a 30-minute candle. Sorry, this is a 5-minute candle you're seeing there. This span happened with this size and all this movement in the space of 30 minutes. And it typically in the profile happens in the M period. I don't know why it always does, but always seems to happen in M period where it goes wild. So we'll fast forward this a little couple of minutes because I want us to get to the highs and we'll look at it. Okay, right, we've just missed it. Okay, so again, same behavior, everyone. We're essentially just seeing continual ripping. You know, the sellers are planting all of these orders here, and buyers are just continuously taking it. We've just had 5k positive delta in the last 5 minutes here. Okay, now there's a point here. We're going to discuss this sweep when it does get here, but this was some crazy action, especially on a Friday close as well. And I think it just essentially looks like a massive stop run as well for sorry, massive amounts of short liquidations too. Okay, we can see now that here's the high of day coming on ES. Now this is going to be a slightly longer video, everyone, but I think there's great value for you in this. Okay, now we're getting to the high of day. Now you need to start sitting up. I need to start paying attention. That was the sweep that happens at 10 to 4. Okay, so we broke the high. Now we want to see some more orders starting to throw in here. We want to see the sellers step in and start putting in some size. Okay, there's nothing worth noting just yet. Okay, now they've put some size in to hold up, and you can see now that there's over 1,000 contracts, 1,400 absorbed, continuous buying. This is the first time sellers have stopped. You want to see NQ tick down. Now is your chance. Now if the market breaks, 76s, you're out. But now's your chance to be taking a short, and you're looking to take 15, 20 ticks, and this should be going in seconds. This is not the time where you sit and wait for absorption. This should be dropping now. Okay, the event ticked up. You want to see continual selling come in. Notice the difference in price action of how this happens. The sellers are getting aggressive. The bid has been pulled, and that's your trade done. This was now. Do you see the difference in the price action there, rather than on the way up? Okay, completely different. You'd seen the MBO data gave you the clue that they planted 400 orders to prop the market, okay, and saying I'm willing to stop the market here, and from here you'd seen over 3,000 contracts absorbed in those three prices, and the buyers could not crack, and you had more size behind it. Notice since that the market's dropped, that 400 contracts has been pulled. and it will most likely be the same firm that's in aggressively hitting into the bid to drive price down, and then it's a cascade. You have people that broke the high, they need to liquidate, and then ultimately the bids have been pulled. So right here you're getting your 15-20 ticks, and then you're out. You know, because this amount of buying, this is a short-term move. You're not going to be fading this all the way back into value after this aggressive move. But the correlations here, NQ is the one it's going to lead. Okay, we also see that the Dow is pulled up off the highs, and so is the Russell. Okay, the Russell is now dropped down as well. Now we'll continue here because this was the trade. I was discussing this on the stream. But the sellers are now essentially cracking, the buyers are absorbing 1,000 contracts here, and now they're flashing themselves. Okay, so if you weren't already out, this was the sign for you to be out here. Okay, the market should never be absorbing 1,000 like that. And now essentially we're just this is ridiculous buying that comes in, and it happens over the next 5 minutes. I've not seen in a long time someone plant 1,000 lots on one clip, right, and it go from this price and then skip all the way up 10 ticks. Not seen that in years, to be honest. They're just continually refreshing and reloading with size, and no sellers are stepping in the way, you know. So anytime the market is dropping this 4 and 5 ticks, it's just instantly been bid back up. And just as a word of warning as well, if you didn't take this trade, okay, when the market came up like that, and you missed that entry, and the market just rips right back up, do not take it again, okay? The market should not be coming back up to test this level. If you were selling, say you missed this, you thought, okay, I'll have another crack at it. You only ever enter on the first time. If this was to reverse back into value, it would have not stopped down here at the 69 quarters, where we saw 1,300 contracts absorbed, and then the buyers started basically refreshing on the bid. Okay. So notice here now, again, just continually willing to buy at the next prices, and we've got the Dow and the Russell is also then ticking up. Just a complete one-way street that's happened. Ridiculous price action. I hope some people were trading it. If you traded it, make sure you leave a comment below if you caught something on this, because this was wild. Now we want to get to the part where there was the 1,000 contracts were shown and flashed, and then essentially they ramped up. I mean, look at the amount of buying that's happening, and buyers are still not done. It's just crazy one-way street. Is what's happening. Some of the most buying I've seen in one direction, you know, in a long time. Now we are seeing it sticking. Notice the 400 lot. So someone on the offer is saying, I'm gonna have a stab here, you know, I'm gonna have a stab. I want to try and see if we can take this market down a little bit. So let's see how they behave. Okay, it's ticked down. NQ's just ticked down. There we go. But again, notice that 400 lot was able to bring the market down again. Okay, so this is where your MBO data becomes relatively powerful. Only 6 contracts were hit off that, and it's still planted there. And notice they're continually offering. And this is most likely whoever's bought this up is just getting out on the offer. But we're going to fast forward a little bit. Okay, that's the first time sellers have got a little bit of action. there's just never as much refreshing on the bid as this, you know. There's just so much size getting off. Okay. Okay, so we're seeing some absorption here at these prices, and now we're essentially in no man's land with the correlations, right? You've got NQ pulling back, the Russell pulling back, but the Dow's at the highs, and so is ES. You know, if you're in this trade right now and you were looking to short, you need to just wait till there's some sort of continuity between them. You know, all these things you need to now pay attention. I mean, to be honest, you shouldn't really be trading this at all. If you didn't take this first trade, then essentially you should be out, right? But I thought it was a very good part to do a video on, just the amount of aggressive buying in one way street. You know, 1,000 contracts they're absorbed and they're still not done. They're happily to continually take more and take more and more prices. There it is again. Madness. It's almost that crazy that it doesn't even deserve words. So, anyway, you guys get the picture from that, okay? If anyone traded this, leave a comment below, okay? But the main part of this video is for you to learn and really pay attention to the correlations. If you are trading on the DOM and you are trading ES, you need to have up NQ and you need to have up the Russell and the Dow. Okay. Now you don't necessarily need to know where they are in their specific market cycle. You just need to know if are they in line with the ES and NQ or vice versa, you know, or are they out of whack? Why are they not following the same sort of trend? Because there tends to be a really positive correlation between those markets. Okay. So I know this is a relatively longer video. If you're still watching, I'd appreciate if you could subscribe and hit the like button. You probably need to have two goes at this. I would advise you to probably watch it maybe slower motion and check the different behavior, because I've been doing this for so long now. I can quickly scan these markets here and know exactly where we're at. But I appreciate when you're looking at this, there's a lot of numbers and it looks quite daunting. So if you've got any questions, make sure and check out the other videos in the description. I'm going to leave some video links in the description for how to read the DOM and how to configure it. Okay. And for anyone that wants to support the channel or wants any other coaching, go to the coffee and make sure and join the Discord as well. The Discord is free to join. If you want to become a supporter of the channel, please check out the coffee. The link's in the description. So I hope everyone has a great day. And if you've got any questions, just leave a comment and I'll catch you next video. Okay, peace.